Why Indian investors should think twice before buying in Dubai. As Indians, we're always looking for good returns abroad. But Dubai has some special advantages. You can buy property without visiting. You don't need to speak Arabic. You can use English everywhere. Plus, it's closer to India than most European countries. But here are 5 things you must consider before you make the leap. 1. Political and economic stability. Dubai is part of the UAE, one of the safest countries globally. But let's think long-term. What if the US goes into a recession? Dubai's economy relies heavily on tourism and trade. If these areas decline, the UAE might follow. 2. Legal and regulatory risks. If you're a foreigner, you're at the mercy of local laws when you invest in a foreign country. Is the process of getting a mortgage transparent in Dubai? How easy is it to sell the property if needed? These are vital questions that many investors overlook. 3. Cultural differences, language barriers, religion, food, customs. These factors matter. For example, if you visit Dubai during Ramadan, most businesses shut during the day and resume operations in the evening. Imagine scheduling a viewing during this period. It could mess up your plans. 4. Transaction costs. These include broker commissions, legal fees, property transfer costs, and taxes. What's the total cost of buying and owning a property in Dubai versus India? Be sure to factor in all expenses before making your decision. 5. Currency fluctuations. When you invest in India, you're insulated from currency risk. Your assets are in rupees. But when you invest in dollars, you're exposed to currency risk. If the dollar weakens against the rupee, your returns will suffer. And finally, the big question, should you invest in Dubai or India? In 2021, rich Indians spent over $20 billion on overseas property, most of it going to Dubai. Why? To diversify their portfolios and take advantage of Dubai's lucrative tax regime. But now the market's maturing, so the game has changed. Is Dubai still worth it, or should you focus on India? Let's analyze 3 scenarios. Scenario 1. The safe bet. 5 years from now, Dubai's property market will be worth $1 trillion. According to Knight Frank, prices are expected to rise another 5%. This translates to roughly 10% annual growth. With rental yields of 6 to 8%, it's like having a fully paid vacation home that pays you. But what if something goes wrong? What if there's a recession, unexpected taxes, or a market crash? Can you handle a potential loss? Scenario 2. Playing it safe in India. Let's say Mumbai's property market grows by 6% annually, which is considered quite bullish. After 5 years, your property would be worth 20% more. But here's the catch. You'd have to pay 20% tax on that profit. Plus, selling your house takes months. You deal with brokers, property valuers, lawyers, and endless paperwork. The constant stress isn't worth it. So scenario 3. Finding the sweet spot. What if you had a property market that's safe, offers high returns, and has a bit of everything? Welcome to Chennai. There are 4 main reasons for this. 1. Historically, Chennai's real estate market has outperformed Mumbai and Bangalore with consistent growth. 2. It's currently valued at 80 to 90,000 rupees per square meter, which is significantly lower than major metros. 3. According to Knight Frank's latest report, Chennai's residential market is poised for steady growth driven by economic expansion, employment opportunities, and rising incomes. 4. Unlike Dubai, you won't face currency risks or political uncertainties. In fact, Chennai ranks first in South India for ease of living and second overall in India. No wonder Chennai's property market is attracting investors who want the best of both worlds, stability and high returns. The numbers don't lie. Between 2017 and 2021, Chennai's property values appreciated by 48%. If you invested in 2017, your property would be worth nearly twice as much today. By 2026, Chennai's market is projected to hit $120 billion, fueled by a population boom, infrastructure development, and industrial growth. And while Dubai's market is expected to reach around $1 trillion, Chennai is catching up fast.